In every corner of the world, there's a dream, flickering in the dark. Not loud, not famous, just real. A man in a one-room shop trying to build his father's legacy. A woman coding on a cracked laptop, fighting the noise of self-doubt. A family stitching garments late into the night, hoping that someday they won't have to count coins to buy rice. This isn't just business. This is survival, soul, sacrifice. But behind every brave idea lies a brutal truth. Dreams need money, and not just money. The understanding of money, the knowing, the wisdom, the fluency in a language many of us were never taught. This is that language, translated, told not in textbooks, but in stories. Because if you've ever been overwhelmed by words like equity, collateral, GST, net margin, or tax liability, and you are not alone. Today we dive deep into the beating heart of business finance. This is not a lecture. This is your map, your weapon, your truth. Chapter 1. The Dreamers and the Dollars. How startups get funded. They say every startup begins with a problem, but what they don't tell you is that the second problem is always the same: how to pay for the solution. Imagine you're standing at the edge of a cliff. Behind you is a life you've outgrown. Ahead is the dream, but there's a canyon in between, and that canyon is capital. So how do you cross it? There are 5 main bridges. Let's walk them one by one. Bootstrapping. This is the loneliest path. It's when you start with your own money. Savings, small loans from friends or family, or even credit cards. You stretch every rupee. You trade sleep for survival. But it teaches discipline. You own 100%, and the scars are yours alone. Angel investors. Think of them as believers before there's proof. These are individuals who invest in ideas at a very early stage, betting on your passion. They bring more than money. They bring mentorship. Venture capital, VC. VCs are not just investors. They're scale seekers. They come in when your idea has traction, data, and a market fit. They invest big, expect big returns, and often ask for a share of control. Crowdfunding. Platforms like Kickstarter or Keto allow the public to invest in your idea, emotionally, sometimes financially. This works when your story touches hearts, government, schemes, and grants. Especially in countries like India, schemes like Startup India, Mudra loans, and SIDBI grants are built to empower. But navigating them takes patience and paperwork. Remember, funding is not a trophy. It's a responsibility. Money raised must become value created. Chapter 2. Loans, the double-edged sword. There's a knock on the door of your dreams. It's the bank. It's offering you a chance. A business loan. Tempting? Yes. But let's slow down. Loans are not bad, but they are binding. Before you say yes, ask, do I need capital for growth or for survival? Can I handle monthly EMIs even in my worst sales month? What is the real cost of this money? Interest, fees, penalties, types of loans, term loans, fixed amount, fixed period, good for buying machinery or expanding, working capital loans for daily operations, inventory, salaries, overdrafts. You get a credit limit based on your cash flow. Invoice financing. You borrow against your unpaid invoices. Secured versus unsecured. Secured needs collateral. Unsecured doesn't, but has higher interest. Red flags. Hidden charges. Aggressive sales agents. Loans from unregulated lenders. Ask, read, repeat. Debt is power, only if you wield it with wisdom. Chapter 3. Profit and loss. The truth behind the smile. You sold out your products. Your store is busy. People say you're doing well. But are you? Let's pull back the curtain on the most honest document in business, the profit and loss statement. It's not a table of numbers. It's your business emotional health report. Revenue, top line. Total sales, the applause. Cost of goods sold, COGS, what it cost to make those sales. The backstage, gross profit, revenue minus COGS, operating expenses, rent, salaries, marketing, electricity, the cost of breathing. Net profit, bottom line. What's left after everything? The real truth. Profit, not equal to cash. You can be profitable but broke if your customers delay payments. So track cash flow, debtors, inventory, aging. Know your numbers? Or your numbers will own you. Chapter 4, GST, the invisible thread. 3 letters, endless confusion, GST. Let's demystify it. Goods and services tax is a value-added tax levied on most goods and services. Types, CGST and SGST for intrastate transactions. IGST for interstate. If your turnover is above rupees 1 crore, 40 lakhs rupees, 20 liters for services, registration is mandatory. What it means, you collect GST from customers. You pay GST on your purchases. You can claim input tax credit, a refund of the GST you already paid. But errors equals penalties. Late filings equals interest. Mismatches equals audits. So keep records, use software, stay consistent. GST is not the enemy. Ignorance is. Chapter 5, tax filing, the fear and the freedom. Every year, it looms. Tax season. But here's the secret. Tax is not theft. It's proof you're building something real. Types of taxes: income tax on profits, TDS, tax deducted at source, on salaries, contractor payments, etc. Advance tax, paid quarterly if your tax liability exceeds rupees 10,000. Maintain invoices, purchase records, salary slips, loan documents, use tools. Hire a CA, but understand it yourself. Because one day, your child may ask, how did you build all this? And your answer won't be, I feared the tax man. It will be, I mastered the system. Final chapter, building a financial mindset. In the end, this is not about funding or loans or ledgers. This is about you. The courage to ask questions, the humility to learn, the grit to survive bad months, the wisdom to know growth is not just revenue, but resilience. You are not small because your numbers are small. You are not weak because your balance sheet looks shaky. You are a builder, brick by brick, rupee by rupee. And in the language of business finance, that makes you fluent in the most powerful dialect of all.